Hello traders, welcome back to Your Nifty Guy. I hope all of you are doing well. So today was one of those sessions where the market moved exactly as per our plan, and it honestly feels great when that happens. We started the day with a strong gap up, which was very much on the cards based on the overall news which was floating around and the way Gift Nifty was behaving over the holiday. After the open, price went a bit sideways and volatile for a while. Typical post gap up behavior where the market tries to absorb that initial momentum. So that was the reason why I had told you guys not to hurry and rush into a trade as soon as the markets open. If it's whenever there is a major gap up or a major gap down, let the market settle down, let the news be absorbed, let the volatility get out, and then we get in, right? But patience paid really off today. Once the structure started aligning, we got a clean, beautiful move. And what made it even more satisfying was how many confirmations lined up perfectly before the breakdown. In today's video, I'll walk you through the complete thought process behind this trade, how I filtered out the noise, spotted the right entry, managed the position, and the exact confirmations that made this setup so high probable. We'll also look at what this price action means for tomorrow, whether the market can sustain above today's range or if we should be cautious going forward. So make sure you hit that like button, subscribe to the channel if you haven't already, and drop a comment sharing how your trading day went. Let's get started right on the charts. So as I had clearly mentioned that in case of a gap up opening, what happens is if in case of a big gap up, right? So this was around 190 odd points from the Mohra trading days low till today's open. And what happens is majority of the profits are lost overnight, and then the market takes some time to digest and absorb the volatilities. And if you see, market was roughly trading inside this range only around here. And if we talk about the market structure, all right, so these are the major swings which I will consider. Now, Siddhesh from the community had shared a chart with me. Okay, he had entered a trade somewhere around 11:10 or something. He had entered a short trade. Now, why that was not a valid trade, I'll be explaining it right now in this particular video. So once market had opened, this was the first major low, first major high, followed by second major low, right? Now what he did was around here when he saw, I guess, believe this would have been his entry candle when the market structure had changed from a higher high, higher low to a lower high, lower low structure. At the break of this particular move, he might have made the move. But there is something to look forward to or always look behind to, which is the major swing, which was very, very clearly evident around here from where we had seen a new high until unless that swing goes out or that gets taken away. These might just be volatility or inside structure. Okay, these are not clear swings. All right, in their own right, the structure had changed internally, right? Around here, the structure had changed from lower high, lower low formation. But then try to understand them. We are still within this particular swing low and this particular swing high, right? But what we always speak about structure is we need clear swing highs and swing lows, right? Now, what happened around here was instead of, right, I hope you guys are following, right? In between this swing high, the swing low and swing high, market had changed the structure internally. But then again, to treat it as a trading entry based on market structure would not be the right thing to do. We need clear swings and clear structure to make sure that our entries are right and we are not part of market manipulations, right? So these are all market manipulations wherein around here, the market showed some weakness on very minor swings, and people who would have shorted around here, like Siddesh's stop loss got triggered immediately after he entered, right? And I had clearly messaged him, do not rush into any entries right now. So around here, markets made again a new high. The point to look here was, are we interested in any long trades, right? the market had already moved a lot with a major big gap up. That is the reason why I said that over the holiday, the holiday which was there yesterday when I had made that video, Gift Nifty was already soaring, and I knew that we are going to be opening with a major gap up. And what happens with a major gap up is, again, like I said, majority of the profits are lost overnight, and then market becomes either sideways or then is usually comes down, right? The probability of it going higher is very low. It can go, definitely it can go. On some rare days, it will be going in because again, anything can happen in the market. Be ready for any surprises, any roller coaster rides. But then what will be the high probability is either it will remain sideways around here or it will come down from after opening with a gap up, which is kind of a profit booking, which many people do, right? And when they see big profits just by holding on to their calls overnight. So that is when they book their profits and then market sees a move on the downside. So were we interested in a long trade? Absolutely not. Were we interested in a sideways trade? Absolutely not. The only trade option which remained for us was a trade on the downside. But then again, will we rush into any trade on the downside just because we are not able to take a trade on the long side? Absolutely not. Right? We should always wait for setups. We should always wait for markets to commit to us before we commit to the market. And then for that particular trade, this swing was the key which got protected even around here. So if you see clearly, this swing was not breached even when the markets came around here, formed a base, reversed, made a new high. But then again, got to observe a lot of things in the live markets. Markets, while price was making a new high around here, RSI was not making a new high. This was your Q number one. Q number two was if you connected these two lows, right? This was a good trend line which had formed. All we needed to do was markets to give us a breakdown below this. The markets gave us a breakdown below this. And before the pullback came, mind it, before the pullback came, this low was also breached, right? We did not get a closing below it. Had we got a closing below it, it would have been even much more beautiful. But then I believe if we had got a closing below it, markets would have fallen with a momentum and not given us the pullback that we required. And post this particular breaching of this particular low and a beautiful pullback, come a retest of this particular trend line. This low became our entry at 130. This is where I entered into puts. As soon as this low was taken out, this was not just this low, this was this low as well, with a stop loss just above this particular swing high. Markets moved immediately in our favor, gave a pullback again, moved down. This is where I shifted my stop loss from here to this particular price point. Markets moved down, 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 down. Again, lost some momentum, formed a base. And this was in this green candle when it had uh, come close, started to move above this particular swing as well. This is where I had got out of the trade, right? Had I not got out of the trade, I would have been in even bigger profits. But then again, that is something which we are looking at in hindsight right now, right? In hindsight, you can also say we could have shorted the markets around here, and this is the big move that we would have captured, right? From the day's high, from around 26,100 odd levels, we are at 25,900, below 25,900, right? So it's a big fall. But then in the hindsight, it's always very, very easy and uh, thing to look at. Okay, this is would have been my entry. This would have been my exit. What about this big green candle which came in between the short trade? So I am someone who would be trying to protect my capital first rather than go for bigger targets. And this is the reason why I always say once you are into option buying, scalping should be the only trades that you should be taking. And the slightest sign that the market is showing that it is going against you, that should be your exit cue. Around here, when market started moving in, forming a very bullish candle after this particular set of dojis and inside bars, I got out somewhere around here. I captured roughly around 29 points in this particular trade. Good enough for me for a day on which I was not expecting to get a trade, right? This is for somebody who has watched my video yesterday. I had clearly mentioned that, okay, I'm expecting a big gap up, and with big gap up, the moves are lost majority of the moves are lost overnight, and then we might not get a trade. But then again, try to understand the various price points or the various confirmations that we got from the market before we jumped into the trade, right? So I hope, I really hope that the Logic of the trade was clear. And then again, once this low was also broken out, I did not enter into because this low got taken out at 3 o'clock. I usually don't enter into any fresh trades post 2:30, 2:45. I avoid any fresh entries. And of course, so only one single trade for me for the day, and it was in a profit of around 29 odd points. So yeah, I hope the logic of the trade is very, very clear. Why did we get into this particular trade and how did we manage it? In case of any questions, you may put it down in the comments box and I'll be glad to answer it. Now, coming for tomorrow, we don't need this. We don't need this line. Since a new high is made, we don't even need this, right? Now let's look at markets on a daily time frame. On a daily time frame, from this last swing low which was made, this is the first clear downtrend, the pullback that we are seeing, right? Markets had moved in a lot after we broke out of this particular trend line, and we did not actually get any kind of a swing. So first of all, from this particular swing, the last clear visible swing till around this high, we will be marking the 0.5 to 0.618 zone that we always do. Okay, cool. And we will write daily time frame Fib support, right? Try to understand. We have moved quite a lot in a very, very parabolic way from the time we had made this bottom around here. The markets had moved apart from these basic minor swings, but then again, for the sake of we are not holding this particular swing to this particular swing because we did get a clear swing around here. So in case if you guys want to see, this was the last major swing which we got. And that is the reason we, while I am taking this particular swing only into consideration from this low to this high, this is the daily time frame Fib support. So we might be coming down to retest these levels and then maybe go up again. Overall, the trend on higher time frame is still bullish. I am expecting the markets to breach this 80H very, very soon, probably in October itself. But then again, that is something which I believe we should not predict, but we should wait for the markets to confirm. And for tomorrow, the plan of action should be very simple. Below today's low, we can see a trade on the downside. Once we are around these levels, we can look for a trade on the long side as well, right? Again, and if we see the rare trap setup, for that we need a bearish candle giving us a closing below today's low, and then we need the high of that candle to be taken out for a scalp on the long side, right? So this scenario will play out. So the fall was a big fall today that we saw from the day's high. For people who would not have participated in this particular move, they will be having good amount of FOMO. Tomorrow, if the market opens flattish, minor gap down, minor gap up, and then breaks down below this low with a bearish candle, and then the high of that candle gets taken out, it will lead to stop losses, triggering for all those people who would have shorted the markets around here, and that will lead to a scalping mood or move on the upside. For any trade on the long side, I will be taking in today's range and marking 50% of that, right? So this was today's high, this was today's low. The 50% is around here, quite close to this particular swing. So I will take this swing high. I will be taking this swing high as my reference point for taking any long trades for tomorrow. This will be a strict no trading zone for me apart from this particular trade if that triggers and all conditions are fulfilled. But then apart from this, we are not looking for any further trades. Tomorrow will also be the weekly closing, and then let's see how the weekly candle closes. We'll discuss it in tomorrow's video. So that's the complete breakdown of today's price action and the thought process behind every move. Days like these remind us that patience and discipline always pay off. The market rewards those who wait for confirmation instead of chasing every candle. If you found this analysis helpful, don't forget to like the video, subscribe to the channel, and share it with fellow traders who would enjoy this kind of detailed breakdown. And remember, every trading day is a new lesson. The key is to keep showing up and learning from the market. Thanks for watching. This is your Nifty Guy signing off. I'll see you in tomorrow's video. Till then, trade safe and stay motivated. Cheers, guys. Thanks for tuning in.